Yo, what's up, guys? Welcome to the Ark Quant podcast. Is that right?
Yes, good, good for the first
Amazing,
time. Good.
amazing. So, we got a very special guest here. Really good guy, above all, but also very, very smart. Always in the charts, like every single day. I come over here, trying to get a little something for myself, and dude's just locked in his computer. So, he's been really good. And like spot on with a lot of the information he tells me. I mean, pretty high success rate, I'd say, so far for myself. Um, Tell him who you are. Tell him a little bit about you.
Thank you, Ziggy. Thank you for the great introduction. I'm a quant trader. So what we do is basically algorithmic trading. We work with a lot of data. We process it in different forms and variation, trying to extract value from it. I've been doing that for years now. I come from the classical institutional world. We used to do it on the institutional desks, and the institutional desks been trading like that for years. Like the institutional desks have not been doing hand-picked trades and all that type of stuff. They've been using different models for quite a bit. So, they have not discovered LLM models, AI, and machine learning
The what
today.
models? Would you say LLM? What is that?
LLM is what we use in ChatGPT. This is like LLM type of models, like natural language processing type of models.
Oh, okay, language models.
Yeah, language models. But AI and machine learning in general was used in trading for years. It was
Wow.
a big,
Who knew?
yeah, it was a big thing for quite a bit. So the what we have right now is the large level of accessibility. Like before, it was
Okay, like only
required like
institutions.
very like high sophisticated basically
So it's been simplified.
development, and it was only like it was accessible only to the institutional level of trading due to software, due to hardware, due to everything. Now with all that improved technology, with all that trading view,
It's much
trade
simpler
station,
now.
and MT5
So
4
for people
type
to
of
have like
applications.
access.
Yeah, it's
Okay.
accessible to everyone. Like before,
Do you think that we're reaching a ceiling right now, or do you think it's going to evolve pretty heavily to just be even more accurate for the common user? We'll call them.
I mean, there is no other option. I simply believe that there is just no other option because we are living in a world which is way more complicated when it was 20 years ago. 20 years ago, the software was expensive. You needed to pay like literally hundreds of $1,000s to get access to what we have right now, what you see me using on an everyday basis
Right.
from my office,
Right.
from pretty much any location around the world where you have high-speed internet and good computers with couple good screens around you.
Right.
You could do it instantly, fast. But on the other hand, 20 years ago, it was a bunch of instruments, a bunch of stocks, a bunch of different industries. But for example, there was no crypto market. Right now, we have a crypto market, and before it was 20. It wasn't 24/7. Like you close the door at 5 o'clock, and you go home. Like you
Right.
don't even at 4. The New
That's
York Stock
it. Yeah.
Exchange closes at
Yeah.
4 o'clock.
So that's
Everything
good.
it
I guess
stops, you
we're.
go home.
Yeah.
And over the weekends it doesn't trade. So I mean, nowadays the amount of instruments increased on one end. Then the new instruments added to the flow. Some of the instruments like crypto trade 24/7,
Right.
365 a year.
Right.
One strategy that is often employed nowadays is that you just exit position the old school way.
Right.
Uh, Before going home, you just
Just
close
close
that
it
so you
out. Leave
could
it off. Yeah.
rest a bit. And while the liquidity is smaller and some unexpected things could happen, but on the other hand, this way you could miss some good moves because, for example, right now in crypto, the moves do happen, for example, in those hours, after hours for the stock market and over the
Right.
weekend. And those moves are pretty fierce and volatile
Yeah.
sometimes, and good money could be made on those
Yeah.
moves. So, I mean, and the liquidity is there as well.
Mm. Mm. What do you think? I guess on that note, I like to talk about for people that don't understand it that well, the alt season. I know that we had a conversation about that. Like right now, it seems like the alt season is coming up in the crypto market, right? What is the alt season, and why does it happen?
Um, okay, very good question, very good topic to touch upon, especially right now. That's actually one of the reasons why I think it's very timely decision to restart that podcast, which we used to do pretty regularly in the
Right.
beginning, but then we went a lot into the development and into the search of proper solutions that we could offer to
Yeah. Same.
retail public, basically. So we decided to take a pause, and the market wasn't that interesting anyway, because for quants we need a clear direction, and right now we finally, after 9 to 12 months of consolidation, like basically since the beginning of the year, for 9 months the market was just mostly consolidating, and there was no good money to be made, no good trades to be made in neither market by most of the part. Our models still manage. I'll share some results. Our models still manage to trade and do good, but that requires certain level of sophistication and understanding of what is going on. So we're trying to basically put it all together in more simple, more dashboard style, more user-friendly way, where the hard and complicated concepts would be accessible to common retail users at the touch of the finger. But the
We're talking about
Altseason,
retail users. What are you talking about? Because I don't.
retail is opposite to institutional,
Well, I
because
understand that, but what products are you talking about?
I'm talking about investment decision making tools, first of all.
Okay.
Second of all, I'm talking about automations like the one that we saw today, for
Right.
example,
Right.
like
Those are the
the
products.
others that we've been testing, like the
It's
ones
very
that
good.
I'm going to show today from Algo, for example. So our role, I'll talk about it a bit deeper later into the conversation, but the idea is that we have knowledge, skills, and because there is a lot of different solutions on the quant and algo trading side, there is 100 different things that you could replicate, and one of the important decisions to make is how to check, backtest, approve, and make decision on what you actually deploy, and that's where we come in. We help you
So on
out
that education
during the
aspect.
selection process.
Okay.
Like we make it simple for you. We do all the back tests and everything for you as a retail user who is not coming. Like the benchmark is very simple. For us as retail users, everyone who is coming into the trading with, let's say, 10, 20, $30,000 of
Okay.
capital,
Okay.
it might be five, but for the quant trading, due to certain costs that you need to incur
And
to
what is
be
quant
able.
trading exactly?
Quant trading is algorithmic trading. Is
Oh,
when,
so that's
yeah,
okay.
it's
So it's
when
bots.
bots, but bots have a bad smell to it, because what we saw today wasn't bots. The bots are more associated. There is like all the exchanges right now have trading bots. Bots are often associated with arbitrage trading when you do like simple, very simple strategies of arbitrage. There is like a lot of very simple bots. That's why quant trading and automated trading, it's a bit more complicated. Like it's more about models which are behind the strategy to make that strategy work. And models are usually more complicated than just simple bots which use like very simple logic. Let's
Right.
say like bot is when it if something goes down, you just continuously buy. It's called like DCA bot, down cost average bot.
Oh, so
This
that's
is
what
like a
they're just
very
riding a wave.
yeah, they're just very simple. Like basically, think about it as a like. one command at a time. Like it can do two, it can do more complicated commands. Like it's one
Okay.
thing at a time. It could do one thing. If the thing goes up, it will continuously
The
buy.
quant is the advanced version of it.
The quant is when it's
Oh, really?
sometimes it's hundreds and hundreds of the parameters might be combined in the model.
Damn.
Like more complicated models, the ones that
So from one to hundreds of
yeah, like I mean, quant is
things to
complicated.
do.
Like
Okay,
that's why it
that's
was not
awesome.
accessible to public before, and now with all that data
Technology.
processing technology, software,
Wow.
hardware,
Wow.
it's way more accessible,
Yeah. So
and
back to
that's what it
Altseason.
allows to basically uh, large retail community, including. Like if you look into crypto, like you know how it is. A lot of crypto traders, a lot of crypto whales are young kids. Like they're not
Yeah.
like
Yeah.
classical old school money.
Nah.
Like because they
They're
know
young
how to play that type of game. Like they know
in the
how to
crypto game,
use
huh?
that type of technology.
Wow.
It isn't a touch of the fingers for everyone, but like they are part of those communities. Right now, it's getting very complicated because we have 18,000 trading symbols in crypto. It's like before, it's like double what it was
We need to have. Yeah.
before. So that selection process, the alt season is about those things, basically, those super cycle. We might be in a cycle which is way more extended in the length than what we saw before, because usually the Bitcoin cycle only lasted 3 to 4 months, and this time it was already going for 12 months. At this point, we could,
Damn, that shit happened for 12 months this time?
yeah,
I didn't notice that. Wow.
was a long rally. It was
So
a long
based on
rally.
that, it looks like we want to hit a double every time, right? Or like it doesn't no, it looks like 90%. I mean 70% or so
What we're
of the
looking,
length of the Bitcoin surge.
I mean, what we're looking at is this happened due to the institutional adoption. That happened because
Got it.
institution got in and created that additional inflow of capital,
Right.
which basically multiplied the cycle significantly. So now, based on the data, there is one big graph that, very important graph that I prefer to look at to identify that. It's called Bitcoin dominance. So basically, Bitcoin dominance means that how much of total market value is controlled by Bitcoin comparative to altcoins. So Bitcoin's all dominance, as we could see from the history, from the previous history, it usually reaches the maximum, and then we have a big drop in Bitcoin dominance. That's where basically the rotation to altcoins occurs. So what we're seeing right now, for example, that the Bitcoin dominance was at the lows basically since 2021, 22, since the completion of the previous cycle, basically.
Right.
It was on the lows, and then it grew to the max point of 67%.
Now it's coming back
And
down.
now, like for the past, basically,
So Bitcoin's dominance is coming down. Okay.
couple weeks, we have a down pressure, and finally, in the last basically month, it seems like, and like right now, we could see that it's finally on the verge of like real break. So based on that indicator, actually, the dominance is the only indicator that might be showing that the cycle might be over
Continue to
in the next 8 weeks, basically. It might
that
only
the
take
Bitcoin
eight
cycle will
weeks.
be over in the next within the next week, 8 weeks we'll know if the Bitcoin sign is over.
I mean, it might be over, the full cycle might be over.
Yeah,
It
because I mean
depends,
it
but
broke that support line
it
there.
broke that support, and usually it's pretty fast. It only usually it might be not broken yet. That's what we don't
Yeah,
know.
exactly.
It
It's not.
might
It
be
may.
still consolidating here for
Yep.
a couple months, depending on the actual flows,
Got
basically,
it.
because Bitcoin still remains pretty strong. but Bitcoin is consolidating at all-time highs, and been doing that for a while, and basically trading in a range for the whole year in that $100,000 to $120,000 range.
Right.
Ethereum, on the other hand, just consolidating at the previous time high. It have never broken the previous time
Wow.
high, so we can't really say
Ethereum's over
that
yet.
we're in Ethereum.
So go back to the to your chart real quick. Your I mean not that chart. Your graph for the cycles. Yeah, oh yeah, presentation. So right now we're here. In the past it's been 3 months and then 2 months. So we're at 12 months, 6 months. So it may not be over, is what you're saying.
Yes,
With
it might be
Ethereum.
not
It might
over.
be go to 8 months.
Yeah, it might be most likely we're somewhere in the end of the Bitcoin cycle, and most likely we're somewhere in the beginning of the Ethereum
Ethereum
cycle.
rally.
It should be that we end an Ethereum cycle already, but since we haven't achieved a price discovery mode yet, and since we're only looking next week, which is our
Yeah,
next
but
topic.
so based on the, I mean, and this is just, me just guessing, but based on the past and the surge cycle in the crypto market phases, Bitcoin surge, the Ethereum rally follows with like a 70% ish of however long the Bitcoin cycle was. And because we just faced all that market adoption, right? Excuse me, all the institutional adoption, which is why we had this 12-month Bitcoin surge. The Ethereum rally may not really be over.
I agree with you. You understood it completely correct. The Ethereum rally, I believe, is just about to start. We have
The
not.
institutional adoption.
Yes.
Okay.
And Ethereum is also a big part of the institutional adoptions. That's why,
Because those are the two main coins, right?
and that's the ones that have the approved ETFs already as well.
Okay. And so, large caps. What are the large caps then?
Large caps, we've seen some moves. Finally, this week we saw some
Who are
moves
the
on the
large
Sol.
caps?
Like, for example, Solana is a large cap.
Okay. So those are the next in line.
Large caps, yeah, is basically the by market cap. Like, I mean, that's also an important part of the
Okay.
altcoin season concept, and like generally that crypto market phase concept. That now when we have so many altcoins competing between each other, market capitalization sometimes may be very thin. There is a bunch of coins trading below 100 million, etc. We believe they might be not in the play this time because there is so many choices to be made, and that's why it's very important to use quantitative approach when you're selecting. I'll make some examples a bit later, but it's sometimes hard to say what you want to buy. Like Solana, there is XRP, there is Uni,
Are these
Link,
all large caps?
Near, all large caps. There's 100 large caps. So
Wow,
I
really?
mean, it's
So it's hard because of that alone to even decide which one to get
yeah, and
into.
that's why you need to respect rotation, like because we know that the
Right.
capital rotates
Right.
from bigger names with larger market cap and more capital requirements to be in. And as the market pumps up, as the market goes up, the people don't want to buy it at all-time highs. The people feel uncomfortable to buy at all-time highs.
Right.
And some of the players already made a bunch of money and a good, decent return because they bought the lows.
Yeah.
So it makes sense for them to exit the big names, exit the Bitcoin eventually when Ethereum finally completes its
Completes its
price
cycle.
discovery mode, exit Ethereum and rotate into the other large caps. We saw the
Got
move
it.
on Solana this week. It was like boiling up. It was obvious that it like something should happen. And like
Yeah. I
we
mean,
discussed it on Sunday. Actually,
yeah,
we
and
made a post on X about it
okay.
when it was around 200,
Wow.
and it
And based on what
basically.
it's doing now, it seems like we're getting the start of it now. Now, if it breaks 295, then we're probably talking
But
It's
since
large cap
it's
season.
not large cap season yet, I think it might consolidate actually to 40, or
Yeah,
even,
I
as we
agree.
discussed earlier today, might go into correction back down to 220, which will be generally a very healthy correction, because we believe we might be not on a large cap season. On the other hand, we have a Fed announcement next week, and that might create a lot of movement to the upside.
Right,
Uh,
right.
but we'll touch upon it a bit later.
Alt
The final
season.
part of it is out season. It's very fast usually. Usually it doesn't last more than like several, up to 6, 8 weeks usually, no more than that. But that's where like the other major projects, including some of the newer projects with the potential, with the community and like with everything, they are hit in and they show good results basically. Uh,
So who's the alt season? Who are the altcoins?
I mean, altcoins are the lower capitalization coins, the ones that
Meme coins or
no, not by most of the time not memes. Most of the times, the projects that make money, the projects that
like the Trump
some
coin? Or no, Doge.
I mean, it's a lot of them. Like it's
Okay,
a lot of them. There
okay,
is a lot of different altcoins. Doge is more a meme coin, but like
got
one
it.
of like the more popular and more like advanced, let's say, meme
Yeah,
coins.
because the meme coins are like kind of like on the bottom of the scale, right? Um,
Yes, because I mean they're based solely of the community. The use cases are often limited, and their revenues are often limited. So I mean, meme coins are a bit hard to evaluate, harder to evaluate, even though there should be some allocation. They should be part of the portfolio. So it should be like not like they should be taken into consideration, especially in the out season part of the cycle.
right.
Of 6 indicators basically that we're continuously monitoring to basically determine what part of the cycle we're in, and that we put it here just to show that it's complicated. We looked over Bitcoin dominance today pretty deeply, but like it's more than that. Like you need to have a broader picture and to have the understanding and to determine, like it seems pretty easy here, but like to actually determine the location of the cycle, like it might be sometimes it's easy to confuse. So meanwhile, in order to achieve results and everything, it's important to know where you are, because that determines what product you trade, what allocations you make. So that's part of the thing that we are automating right now, and that's built in our models. So like basically, some of our more advanced models, they take into the consideration. Mostly here we're talking about on-chain data in combination with macro data points. We update this type of analysis on a daily basis to basically uh, guide us better in cycle determination, and to guide our customers, our investors, and the retail community, the broader retail community in that process. So everyone doesn't need to do that analysis, because that requires, even that type of analysis requires like at least $1,000 of different plugins and software per
Wow.
month to compile all different data sources, because all the data is paid. The data is there, but like to get
I
a good
understand what
data,
you
like
guys
you
are
have to
saying
pay. Like you
now
have to pay for
about
the
getting
data.
all those about Billy. Billy was like, yeah, well, like we would pay for all the softwares and all the stuff to basically get all the data and information
Yep.
in this club. Okay, now it makes more sense. Okay, so give me in like 2 sentences what is alt season and why does it matter? To sum it all up, right? If you could sum it all up.
To sum it up, in
Two
the very
sentences.
easy words, it matters because it determines what products you trade, what products you take profit on and exit,
The alt season in general does.
The alt season in general, the cycle, the cycle does. The stage of the cycle determines that, and then within the when you determine in which part of cycle you are, you determine the structure of your portfolio. You determine what to hold more. Like, is it right now? It's not a good time, for example, to hold
that's really
Bitcoin.
good because if I understand correctly, it's like so. The alt season is super important because whenever you see it where it's a little ahead, you know that that's the end of the whole cycle, or right?
That's what shows you when to exit.
When to exit, when to enter,
and when to re-enter again.
Yeah.
And what to re-enter in. And what, like, that's...
Because when you start seeing alt season,
that's like a macro view.
Right? It's over for now. Wait for the next season.
Yes.
Okay.
Yes.
Okay.
When you're deep into alt season, you don't want to buy anything. You want to
alt season is like get out. Yeah.
You want to get out. Deep into alt season. The beginning of alt season is a lot of fun, but that's where the greed comes in. That's where, like...
people want to get all greedy.
Yeah.
And right now,
it's like the main theme for everyone, and everyone tries to get you.
What you're saying here, the end of this year is alt season. End of.
What the data is showing as of now, I believe, I read my data. What the data is showing to me right now, that we're likely to reach that moment in the end of the year. I might be off based on the latest data that coming in, and based on the general opinion. There is an alternative opinion saying that it might, there is a general agreement right now on the fact that it's going to be extended cycle this time. But there is no consensus on how extended it will be.
It's already been extended.
I mean, it might
but,
be...
we may not even be at the end of it.
It might go to the mid of next year. So we might go as far as...
what I was thinking, and I could be totally wrong, right? Because you're way more... This is why I like Mike. It's because he's so deep into it. He's so extremely analytical. That's an asset. You know what I mean? And but based on what I'm seeing is like, I'm thinking Ethereum is gonna go until January, February of next year. Wait. Let's see.
January, November.
Yeah. Okay, so that's June to November so far. Right?
June to November, yeah.
So November, December. I'd say to February of next year.
Might be. That's what I was about to say. That there is people who believe that the cycle might go as long as mid of next year, so as long as June of next year. I'm still betting on December 25, but we will adjust. That's the thing, that you adjust as the data comes in.
Because you're just like, hold on, because you'll get more data by December before December.
Yeah, exactly.
So you'll be like, okay, maybe November, October. You're like, okay, we have enough information to say we're gonna.
Like this type of macro analysis, we usually update on a monthly basis, because it doesn't make even sense to go deeper into it, because we don't have enough data.
Yeah.
It just makes sense.
That makes sense. That's really
the
good.
general trend is that's the top level look. That's where we start basically.
Yeah. So there's a Fed's meeting next week. Is this the big thing you were talking about?
Yes, Feds is a big thing.
Big news.
Influences what we just talked about a lot. Influences the market cycles in general, and market phases in general.
Okay.
We've been waiting for market cycles are highly dependent of the interest rate cycles, and interest rate cycle was basically in stagnation mode, full stagnation mode. Well, the
interest rates for crypto?
Not interest rates for crypto. Fed meetings determines market interest rates.
Oh, wow.
Market
obviously
liquidity.
It affects this too.
Yeah, because market liquidity, interest rates is the rate at which the economy operates, at which the bank borrow from each other, basically.
Wow, okay.
So it's interbank exchange rate.
So it's not even...
but that's what brings the liquidity to the market, basically. That's what... after the rates decrease, the additional liquidity flows into the market, and that's what the risky asset needs.
If the rates increase?
Decrease.
Oh, decrease. Oh, because people are going to be able to have more money.
Because the money is more cheap, it becomes cheaper.
The money becomes cheaper.
When the interest rate decrease, the money becomes cheaper. Yeah.
Wow. Okay. I thought that it would be the opposite.
Why?
Maybe I don't understand correctly, but because I thought that
You borrow at a less rate. You borrow at a smaller rate. Your mortgage decrease, everything decreases. That's why asset prices go up.
dollar went up.
But it have nothing to do with the dollar.
No.
It does, but like not in that sense, because the dollar value goes down because they print more money. Yeah,
Money
but the
becomes cheaper,
interest,
like you said.
the interest rate decrease doesn't mean that the money gets printed right away. The money
So how
gets
come the
printed
interest rate is decreasing if the money's cheaper? Doesn't the bank need to make more money so the interest rates increase?
because the interest rate decreases. The banks, everyone spends less money on interest. The banks make less money. Yeah, the banks are the only one who make less money. The rest of the economy is
Making
growing.
more money. Wow. Okay.
So basically, the Fed rate is the Fed rate decision is one of the most important, like among 100 different economic news. All around the globe, the people are waiting for the Fed's interest rate decision. It's one
meeting, huh?
the most
Wow.
important meetings of the month
Yeah.
for the whole basically financial world and investment community, because United States dollars drive the whole economy, and how much you could borrow US dollars, at what rate you could borrow dollars, basically drive the economic growth, not just in the United States, but also across the world. And economists have to adjust, like the other even big world economists have to adjust to U.S. decisions to align the interest rate and the currencies with the U.S. economy and the U.S. stand on the on that. Those interest rates were especially important for crypto because the low interest rate usually mean more investment into high risk asset, and since crypto considered a high risk asset, that usually results in a big volatility and a big inflows. Last time when rates were decreased, crypto was going up for months. So that's why it looks like, and the rates have not been really decreased yet, and the money has not been printed yet, and that's another reason for the super cycle. But this is happening right now.
We don't know if they printed the money. I don't think they printed money yet.
No, they have not printed any money yet. We know that because we have the data on the money printer. M2 has been increasing in the United States and across the globe.
So this Fed's meeting may not really talk about no interest rates dropping.
No, they will drop for sure. This time they will drop for sure.
Why?
I mean, because of all the other economic data, because there was serious revisions to the labor numbers, and because the Fed have dual mandate. They're worried about inflation, and that's when they increase the rates. But they're also responsible for labor market and for unemployment rate. And the unemployment rate showed a significant increase. The economy is generally slowing down. And there is this big theme in crypto right now, which in crypto in general, in high tech, like the side poly market, like where you bet, on different forecasts. Yeah. And
isn't that so cool?
It's
so
very
hilarious. That's never been
and it's very efficient. It's very efficient. It was very efficient. And poly market for the first time shows very high probability of like 90% probability of the rate decrease. And generally, all the economic data and all the economic forecasts and all the talk around it, there is no reason. It was supposed to be done a while ago. The consensus opinion is that it was supposed to be done months ago, but since it hasn't been done, now it's definitely time, and there is more talks right now about how big will be the decrease, whether it's going to be just 25 points or if it will be 50-point decrease.
So in terms of the housing market, it probably would have been better to get into the houses now and then cash out refi.
I mean,
before?
yes, that makes a lot of sense. That's what like a lot of investors try to
what
do
they're
is
saying.
kind of front run the market increase. Yeah,
Okay, but even still, when the markets when the houses will be cheaper.
yeah. The houses will be more expensive, but the rates will be cheaper. That's why.
Oh, the houses will be more expensive.
Yeah, because when they add liquidity, when they
Inflation.
decrease the rate, the demand increases. There's more people could afford it to buy the same amount of properties if it's housing or crypto if it's crypto.
Damn.
So everything like that's why I mean usually the cycles of the when usually
How many
when
FATS meetings are they having in a
they
year?
have
But this is the
I
big one.
believe 10. No, it's every month.
So
It's
every
mostly
month,
every month
mostly.
except for Christmas and there is
But
one
this one's
of
a big one.
they're all big
They're all
ones. They're
big.
all
Got
like
it.
that. They're
Understood.
all like
Okay.
that.
Wow.
They're all about decrease. They review that decision
So I still might be able to get a
per
house pretty soon,
meeting.
huh?
I mean,
If I can get a house in like 5 months.
that might be too late. That might be too
Fuck.
late.
2 months.
You just wait for
Couple.
the market decrease at in like the 5 month because everything is pretty forward looking. So I mean, in 5 months it might be already pretty escalated.
Okay. Wow.
Usually goes fast.
Okay. Well, that's huge. So I want to go back to the quant trading for a lot of people that may not understand even what that is or what quant traders even do. So I'm kind of, you are a quant trader. Yes. Could you define in like a couple sentences the gist of it? Like, what do quant traders do?
It's pretty pretty complicated concept. So it will be hard to define in a couple of words, and it will be kind of hard
I
to
know
talk
that's what makes it
about it.
fun. That's what makes it fun.
But
We're gonna go deep into it, but
yeah, let me try to start
okay,
unwrapping it a bit,
okay,
and let me just show it in a bunch of actual visual examples on what we do. Like this is one of the great algorithms that we like a lot, which we've been using like for about a year so far. Pretty advanced. I would say we're pretty advanced with how we apply it at this stage. It took us some learning curve, as usually it takes with those solutions to figure it out. But that's one of the algos that we've been using, and that's a weekly insights, an example of weekly insights report. We usually do it around like the weekends for the previous week, just to basically evaluate on where the market is standing, and based on that algo, what are the good trading opportunities. That's like a final heat map. Like we usually have like around 10, 12 different symbols that we look at, which are on our watch list. And that's what we saw last week. We saw that Bitcoin isn't like red is bad, like not bad. Red is more like short, bearish. Green is bullish, and zero is undecided. Yellow is
okay,
undecided. So,
neutral. Okay,
yeah, you don't want to trade undecided, obviously, because there is no established trend. We are in the overall bull market right now. We believe that we're overall in the bull market. That's why, and we're not in the correction mode. We don't feel like we're in the correction mode.
yeah,
That's why we don't trade the short-term signals, because we believe that that might be a fake short signal.
yeah.
But the three things that were showing like semi-strong last weekend, remember, was still like pretty dead market, pretty
So it's
consolidation mode.
really cause so a quant trader is someone that's trading the algos.
The quant trader is someone who is using algos to process the data, and based on the data and the backtests on coming from different sources, make the final decision, because that
On
simple grade,
which quant to use, which
which
algo to use during
which
that time.
algo to use, how to use it,
Okay,
how much
how to use it.
allocate to it.
Okay,
So all those different questions, all those complicated different questions,
yeah.
I get answered in the process of an analysis. Here is the example of different, like in this one grade that we simplified it to here. That's the model.
Right.
That's our knowledge. That's our algo. How do we simplify all those different indicators that we got from the model? All those numerous indicators. Like here, it's like the top four, let's say, that have most influence. But those top four are then could be broken down to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different indicators. And that's a pretty simple model, showing different things, analyzing different things. And based on all of that, we basically selected three instruments that we believed had a pretty strong trend and a pretty strong probability. Even though some, like for example, here on Ethereum, it was showing different direction. It was on one of the indicators bearish. Sol was bullish, strong bullish, bullish, and then natural on one indicator. Here it should be red. It was bearish for link, but bullish on two. So it was also determined the strength of the
What's
strength.
the SNL rate, pack rate, and OSC rate? What are those just
That's
moments
like
in time?
different models that are used within
Oh,
Las
those are different
Algo.
algorithms.
Yeah, those are different
Oh,
algorithms that come from that all
on
together
particular. Oh,
basically
okay.
come into
Okay.
the
Okay.
overall
Got it.
evaluation rating.
Okay. Those are the names of different algos, basically.
Yeah, so basically here we provided, based on the analysis, we provided some support, resistance, strength, and etc. We were looking at the graph, and we were saying that ETH looks good, even though it's a bit overextended already on the buy side, because the good entry points on a 1 day graph, and we mostly trade 1 day, but we'll explain why we do so at a later stage. Because at the end of the day, we trade different models. We might trade even 5 minutes, 15 minutes. We usually don't go below 5 minute models. And we mostly trade in 15, 1 hour, and 1 day models because we're more interested in longer term swing trades. But what we saw here, we saw very strong demand zone. We know that there is potential. We felt like it might not be broken, even though it could have been broken. So basically, the two scenarios at that point was that it either breaks and goes more down into the correction mode, and then it might retest the 3000, the 3900 levels, or break above. And what we saw was that. That's also like good to see that it's pretty simple to use. Like for example, like that's why we like to use that algorithm a lot, because it's very user friendly.
Okay.
Just in couple clicks, you could pull up.
That's really interesting. That's awesome. I like the quant trading uh, situation. I didn't understand what it was at all. But now I get it. You just got a bunch of different algos and you're like figuring out which one's the best to use and when to use them and how to use them, motherfuckers, right? Right?
Yeah.
That's awesome, bro. That is awesome. So this is perfect. What we're getting into right now, right?
So what we saw
This
basically, we saw that there was an entry potential here at the demand zone, and it did work out. Basically, it did work out very well. The prices at back to the previous highs almost. We're hitting the premium zone and most likely entering into price discovery. So with Ethereum, that was basically the last good chance to enter. Most likely, it might correct back to here and create a new good re-entry zone. But now the price is already too high. It's already overextended in the move, so we would not suggest to enter Ethereum at that point. And the same happened to Solana. We also were looking deeply into Solana because it was already also scored very well with two green boxes. Pretty good results here with strong bullish, and not natural, so it's not bearish response. Pretty strong strength.
So the OSC rate one is kind of looking like it's not doing the best.
And we
Yeah.
what's up?
the OSC one,
Which ones?
the OSC bot, or excuse me, Algo.
Why?
I mean, because seems like all the ones
Oh,
that it's
that it's
using is
missing. That it's
bearish and
missing.
neutral and bearish and
Because
neutral.
it's like more short-term algorithm. It's like it's more it has more weight, less weight to it, because it's supposed to filter out, like it's supposed to more like filter out things. And when it shows bearish, it might be correction within the move, within the overall stronger bullish move. It actually might be a good, like for long entries, that bearish here might be actually a very good thing, because that's a correction, like basically, like for example with Sol right now. So if it might be showing bearish, like it's overall stronger uptrend, but if it corrects down to 210, OC OSC
Yeah.
would be showing bearish. It's bearish because it's correcting right now. So if you are a short-term trader, uh, it's you might want to short it, but like you might want to take the
So you bet
bearish
against
step,
it. Oh,
like
I'm
within a
tripping.
larger.
So wait, this graph here is just showing. I mean, this algo, right? Go back to the chart for the algorithm. Yeah. The presentation. Yeah. What this chart is basically showing, what the algos are saying the market is doing. Is that what I'm saying, or is this the performance of each algo?
No, this is what how they read the market.
Got it.
That's how the algo reads the
Got it.
market,
For how
and
long
what
is this
stand
supposed to?
is it taken basically at this
Okay.
point.
Okay. Okay. So this is how it's been for what time period?
I mean, it changes depending on the time frame. It changes depending
Oh,
on
it
the
changes on
time
the
frame.
regular.
Yeah, it changes depending on the time frame. Actually, that's a great question, Ziggy. You're going a bit deeper than I expected to go,
Well, I'm
but
trying to find out. I want to learn.
let me show you. So that's like Algo screener functional. So that's what we see here. So you could basically look at it on any time frame you want to trade, and
Oh
um,
wow. Okay.
usually we look at it on the daily time frame because we
Got it.
want to use it
Understand
to
what's.
span longer term trades, and that's type of the analysis which we usually do once a week to determine overall market
Got it.
state. But like on some days, like Fed's announcement, we might want to look if we are trading more short term. Like for example, we're entering the weekend right now, and we see that on 1 hour, one of the signals rotating down. We had a pretty strong day behind, and the markets are cooling down from a strong day. So the shorter term HWO
So you're.
shows some shorting potential, while overall
So
market
this.
strength,
Okay.
is strong up plus.
Overall, got it. Okay. And this is on the hour. Okay. So this information, is used to program the actual
Yes,
algorithms.
yes.
Uh, and these three out. Okay, so
This is what creates the price, the signal. This is what creates either a signal to buy, to sell, and combined all together.
yeah,
That's what generates those signals. The signals are right here. Like for example, for Sol, the strong signal on a daily graph, the fourth signal. There is one, two, three, four.
got
The
it.
strong fourth signal was rendered when it was at $160, $166, and it was going up since then. Like there was no, like there was couple sell signals, but again,
Wow.
that's how you interpret the model. You could exit here, or you might want to stay. Like for example, here we see it that the price just reached previous high. So I mean, you might
Are
exit
you
here, but
manually putting in these trades,
you
or
could do it the way you want it. You could automate it. Like we have a not fully automated solutions, but the way we do it, since we combine several different models together, like it depends of the size. Some bots running in completely automated mode, especially if it's like 5 to 15 minutes bot. But here we're looking more at the daily trends. This is like longer term trends. Like I have a lot of time to make decision. Like here, the longer term 1 day bots, the 1 day models, and we use more to basically in conjunction, like we read it, because here you have time to make decision. With 5 minute bot, you don't have time to make decision. Here you want to actually interpret several different things, including what the news are coming in right now, what's the bigger, broader picture, and the broader picture that Sol should be breaking out here. That this is a previous top which been hit before. From the model perspective, the model just made a great return, and model thinks that it did a great job, and it should take the profits off the table. And we understand what it does. That's why it's important to understand what your model do, because we understand that we programmed the model such a way then it makes 30%. It takes the money off the table. It just it just went
like, don't get
one,
greedy. That's
yeah,
good.
like
That's
it was
very
like 1, 2, 3, 4, 5, 6, 7, 8 days. In 8 days, 30%. That's a very like heavy return. So that's why the models are programmed to exit
You
here.
came from institutional banking.
Yeah, yeah,
Great.
yeah.
Awesome.
That's why, like, that's how the
And you were just like,
institution
yo,
do.
I mean, all the
For
technology's here. Like, what
institution,
the
yeah.
fuck am I? I would just do it for myself, right?
So it's
Pedro,
50%.
you see
Right
that
now
pump?
it's 50%.
You know what that vape is?
I
One down
moved.
here.
I
That was the one
moved
in here.
everything. I moved everything in there.
No, yeah, the other one though. That was
No,
there.
everything
Where's it at?
is somewhere in the. Yeah.
In the cabinet? Zealand. Okay. Yeah. Um,
So that's all combined basically together to determine the levels of support, resistance, strength, and that's another one that we've been talking
so in
about.
simple words, also like, you know, based on what we talked about, how is quant trading different from the other types of trading? Just like simply. Just
I mean, there is
I think I
different.
know, but just to put it into words.
I think there is like nowadays there is different styles of trading, and I think that again the retail community in general became more sophisticated in terms of what they do.
What they can do.
Some people still trade based on very fundamental analysis. Like generally, we could divide it in two groups. It's either fundamental, where you look at the products that, for example, you use, and you use Apple, and that's why you buy Apple stock, and you use Samsung, and then you buy Samsung stock, and then if you wear Nike, you buy Nike, or if you use Bitcoin, you buy Bitcoin because you believe in what you use. So that's like more like fundamental type of approach. Or there is alternatively technical approach, and what technical traders do, they analyze data in one or another way. So they don't give a shit about what they use and what other people use, because they believe that all the habits are already reflected in the price action. That you don't need to read, explore, and like collect multiple data, which is usually subjective. Like this is usually influenced by.
And what do you call that again? What do you call that again?
Fundamental trading.
Fundamental trading. Oh, okay.
Yeah,
They just basically pay attention to the charts, and they're just like, it's all there.
That's the fundamental is all other information. The chart trading is technical trading. That's what
technical
quants
trading.
do.
Sorry.
Yeah, that's what the quants do. They trade the graph, and they believe that all the other
more technical
thing
than anything
is noise.
Yeah.
And that all that noise is already reflected in the price because it's known. Everyone knows that Apple came up with a new phone. Everyone knows that Ethereum did some crazy upgrade. Everyone knows that Solana issued something else. So
Wow,
everyone
that is
knows those
crazy. Like I do
fundamental
believe in the
news.
technical trade. I think it'd be nice to marry the two. But
We
I do
marry
like the
it. We
technical.
do marry it as a quant traders. We marry it through the more complex analysis where we include sentiment data. But again, the way we read the sentiment data, the way we read those news, we read it for sentiment.
Right.
We read it
Thank you, bro.
based of the computer language. We read it based on how our models believe that would influence the price action. What we saw today when we had that meeting with your trading people, with your trading fund, what we saw in their strategies basically is that they interpret the news, they trade of the news and
Fundamental. A bit.
it is fundamental.
fundamental
It's completely
tactic.
fundamental, but that's where the things are married because they use LLM models to,
AI
to
algos to-
interpret those fundamental news. Like that's what they do. Like, and they
Oh.
train those algos on a long data set.
That's really
And they,
awesome.
claim that their algos achieve consistently 5% return on those very short-term trades. But
On
that's
average.
how they trade it. They trained it. Like that's how they trade it.
Okay.
So,
Okay.
but that's a perfect example of how those two things are getting married.
Right.
But Link is also a good example of the chart where this algo works perfectly, even though there was no buy signal yet on the Link because it's already a bit overextended. It had a very great run from 16 buy to 25. It's still in the sell mode. So this is an example where it's running a bit late because all the analysis showing to us that this is a great buying point. And that's an example where I might be overriding the algo, like where I might be saying, okay, I still believe like that the algo is great tool generally, but I think that in this particular transaction, it's
Yeah, 'cause the
making a
rest is sell,
mistake
right? You sold it
going
there.
short because
Yeah.
this is a long market. First of all, I agree that this might be a good stopping point, but I also agree that this is a good re-entry point, and that's what the
Agreed.
other algos,
too.
more
Based on
complex
my-
one, where they combine different indicators together. That's what they were showing, and that's why I might still go in. That's why I want to have that manual ability to
To be able to
combine
come in
different
sometimes. Yeah,
factors.
because based on my understanding of charts and where the market's going, we're still in the bullish on this chart here. We got, it just bounced off the support.
Yeah, and it was
Yeah, so it just bounced off the support there. So and based on my understanding and like the way you put the graphs together, what is that box called again?
this one
Yes, that one.
support. So that's a
Yeah,
support box.
it's a support box. Yeah, so boom, it didn't even go inside of there. Because that's a little tough point for it.
Because
So
that's a pretty strong,
pretty strong support.
yeah,
Pretty strong support line. Yep. Oop.
pretty strong price action. So it was easy to miss it because usually you wanted to go inside to make the trade.
Right. So maybe that's why I did it.
Maybe,
That could be good.
maybe.
That could be good for the long term. I mean, just keeping it profitable. To me, it's like I don't want my algos to like be doing too much. Just do what it needs to do consistently.
But sometimes it's like harder to read because when more factors are involved, sometimes it becomes more complicated. And what again, your partners told us today that sometimes it's better to not intervene and just believe that your algorithm is sophisticated
as you
and
got
advanced enough
Setting
to
your
do
stop
the
losses
job.
and shit. Yeah.
This is another parameter, like very important, like set of parameters that we look into, because everything that we talked about before was more related to price action data and price action technical indicators calculations. Here's like a bit of crypto-specific twist. With, for example, total value locked coming into the play. That means like very important for all the DeFi chains, which
DeFi.
basically, for all the DeFi which basically shows the level of activity, the level of the usage of this particular chain.
Yeah.
So they also come into play, and that's basically also kind of answers your question that you asked earlier, how you determine large caps. That's how you determine it. You basically look at the total value locked, and that helps
Okay.
you to determine who is large cap. And the ones that in the top 10 list is definitely DeFi level, based on the DeFi indication, are definitely close to top market caps at least.
Okay. So I mean,
Like that, as close as you could get.
right. So clearly, you obviously know a lot about this, and you're a G with this shit. Honestly, from what I've been able to experience personally, and from getting this deep dive. I mean, I know this is just scraping the surface, but you know that even tells me more. So with that in mind, Mike, what's next? You know, what? Give me what your opinion is on the top 5 calls. Not financial advice.
For sure, no financial advice here, just technology.
It's
We're
technology.
just showing how to use the technology
Yep. Yep.
to for your advantage.
Yep.
Okay, so let's go into the what are we looking at right
Yeah. What are
now.
we looking at?
I actually have selected 6, but we could do
5.
5. Um, I'm looking at AVAX. It already,
AVX. Is that an altcoin?
yeah, it's an altcoin. Since we're positioning ourselves for the altcoins run, I like AVAX a lot because it already proved us this week some strength. Most of the altcoins have not broke out from that triangle pattern that we see right here. So most of them are still at the lows.
So that's AVX. What's the ticker? What's it? AVAX.
AVAX. Yeah. So it was the signal was rendered at the buy signal. The latest buy signal was rendered at $22 when it was consolidating in this pattern, in this triangle pattern, and it was still too low to take that trade. I was looking for the breakout. Now we actually have a confirmed breakout.
Okay.
It's acting very strong. It's actually consolidating at the breakout right now. And we have very strong levels at 37 and 55. So basically next moves that we expect, I mean, it might go down. Like the great
37
buying
is the next
pose
move.
would be to buy at the retest of 29. But again, with the positions like that where we missed the entry already, and it's good that we missed it because it wasn't a strong signal. One of the reasons why I wouldn't enter here because it was only 1. It wasn't 2, it wasn't 3. Like I usually prefer it to be at least 3, preferably 4 to enter. So it was a very weak signal. Before here, there was several lost trades before it, or minimum trades. So it wasn't a strong signal. The strong signal will be at the retest of 25 level. But since we are in that phase of the market where it's getting pretty aggressive, and since we are facing the Fed meeting next week, that might be, it might not go back. It might just go straight up to 37, and then the retest level will be 29 already. Right. Or it might not even stop here, go all the way up to 54, depending on the announcement. If the announcement is 0.5, we might see 55 much faster than we expect. But generally speaking, I do expect some consolidation in this zone. And if it breaks out, I expect move to 37 and then consolidation and potential retest of 29. Okay. But AVAX is very strong. I'll be definitely adding AVAX to my portfolio.
Next we got
Next we got DOGE. Everyone loves DOGE. DOGE had a very strong week too. Also, it was a long-term consolidation week range with higher highs being made and no low lows been made. But it was also this time like that was just a regular triangle, like you could, like it was showing as descendant, but I could argue it was ascendant triangle actually. Here's a regular symmetrical triangle, which was consolidated in it and was so boring that it was
this
like
data here was Created by the Algo.
Yeah, this is all
Nice.
Algo. This is all Algo. So this is it was basically trading at equilibrium point and not moving, so it was boring to trade, and we was waiting for the breakout, and the breakout happened. So we have the BOS here, and most likely we're going to have a major change of structure from consolidation to upside here. So that's probably the last good moment right now. Like, I don't expect big rebounds here. If it does, it just highly unlikely, because this level had been tested before. This is very strong level with a lot of volume left in it, and if this level is broken down, there is not too much to stop the price from going to 42. So it might be, again, Doge moves very fast. You see, like, Doge moves very fast. So with Doge, with Doge at the levels like that, like when it makes higher high, higher high, higher high, and then just like in 4 days, it's double. So Doge are very emotional. Doge is very emotional. So again, like I did not add here, but because even though the 4 was a good signal, it's just that it was out of the triangle range. It was consolidating for too long, and though I don't like those long consolidation, because they might result in a move down.
Yeah.
So that's why I didn't enter here. And now it might be a little bit look like it's a little bit late, because like some escalators are actually a bit elevated to high, and we are trading in the premium zone. But I believe that the overall market trend and overall market conditions, with the Fed meeting coming in and knowing the price action, how the Doge trades deeper than the level that the model is judging it, at least this model is judging it, I believe that that could be still used as an entry point. And sometimes it's good to use it to go even further and look at the weekly chart. And the weekly chart actually shows that the entry point, the previous entry point was suggesting at 13, but there is still room to go. Like the weekly, like if you're a longer term trader and you're trading off the weekly graph and you're ready to hold it for some time, this might be a good confirmation that, okay, even though the daily is a bit overextended, we still have strong confirmation for the continuation here, for the continuation of the trend. So Dodge is another one that I'm looking at. Let's jump. Let's do HBAR.
HBAR.
HBAR is gaining a lot of momentum in this
Is this in
particular
order
cycle.
of what you're looking at most? Is this in any particular order?
Not really, not
Okay.
really. I just picked the strongest one. We're going to work on the detailed analysis with all the data compiled over the weekend, and around Sunday we'll present them in an order, like
Okay,
it
got
was done last week. But
Okay.
for now, it's just those that are showing on the radars, basically. That
Okay.
some of them might be too late to enter on Sunday. That's the problem. That like
I
it's a
got
weekend
it.
before the Feds, and it was pretty strong price action on Friday. So some of them might be too late to enter. That's why I thought it might be important for us to come live and to show that to people today, because again, we live in a fast-paced world.
Yeah.
Again, Hedera. I generally like a lot of a lot the structure. What I don't like is the strength of the signal. It's only one. In this case, the structure was broken to downside, and it was consolidation at that equilibrium, which happened to be a lower lows as well for that triangle structure. But we do have very strong supply zones, and we have 4 days, 4 consistent days of very strong move up. There is not too much upside potential to the all-time high in this case, That's why I'm going to look at more models and more data. I don't think that's a strong buy. Like if I think DOGE and AVAX look like stronger buys for me, and there is also a smaller coin as well. But again, Hedera is more like altcoin type of coin, so it might be not a time, not the best time to buy it right now. But I still wanted to add it to analysis because on the altcoin side there is not too many things yet to look at, and since they move very fast, especially after they break the key levels, and while they're not at the all-time high levels yet. I want to point it out because again, at least here you still have a double potential for potential re-entry, and it's not too far up from the low and from the actual signal to enter. But this is like more risky plays that might, for them, it might take a bit more time to work out.
Right, right, right.
Let's just pick one more from the list. Which one
Okay.
you like? Anyone? Pick anyone.
Sui sounds good.
Sui sounds good. Let's do Sui. And then I want to show a couple of full automations, full robots,
Okay.
and what they've been doing.
Okay.
So Sui just recently got a one again. You see, like the models are still like not really sure. Like the ones are not the best signals. That means that not everything is aligned for it. But again, why I chose it, why I selected it, because this is one of those plays that been already high up. Like we're right now trading at 3.7, and the previous high is at 5. So it might be, it's a pretty strong play, and those strong plays, they move in those like very fast paced modes. So since I believe generally the structure is very strong and there is a lot of demand on top of it at 4.5 and 5, for those who are ready to take more risk and with a pretty high upside potential. So like here, like if we enter here, we still have 20% left to the first level and 34% to the next level. So it
Wow.
might be one of those plays that like 7 days, 34%, like 5%
Wow.
a day.
Wow.
But those plays are high risk plays because it might turn around and might go down and might retest for the $3 level again. And then that's why, like with those plays, sometimes it's good not to go into full position right away. You take like 50% here, and if it fires up, who gives a fuck at the end of the day? Still made 34 on 50 per, even if it's a 50% position, the return is high enough to
Yeah.
compensate for only
Yeah.
half position. But if it goes down, then you buy more, and then like it just goes up
Yeah.
exponentially.
Yeah.
Okay, let's do a bit of bots. Couple bots I want to show.
Yeah.
Um,
Yeah, I want to see
so
the
like
bots.
this is the full automation that we have right here.
You mean the algo?
Yeah, the full algo trading, absolutely independent without no interventions from us.
Okay. Let's see.
So this is the one that I like. It trades a bit more. It wins. The why I like it because on the 90-day range, it made 30% on Ethereum, which didn't really move too much. That I mean, it was some move in
Wow.
Ethereum, but it wasn't like a crazy, incredible move. So
Right.
it was mostly consolidating, and as you could see, like it cut a pretty good trade right now. So
Wait, what the heck? Ethereum just went up that much?
no, wait, it's a daily graph. It's a 5-minute graph. It's a
Oh,
5-minute.
5 minute. Okay.
5 minutes. But today was a big day for Ethereum. Today was a
It
big
was.
day.
It
It
was from
was
4,500 to
yeah, to
4,700.
4,700, and it cut the whole move. For now, it cut the whole move, and it's not exiting yet because again, I agree with the algo. It's not time to exit. But what you could see here, for example, and that's what happens. That's how the algos work. Here it had a big lose and trade, and with those algos we don't intervene. I like, for example, like I would have not entered like after that consolidation. I wouldn't do a short because generally it's like a bullish market, and I don't like to short a bull market, and that's what happens when you try to
Okay,
short a
this is
bull
the one
market.
that did
But
30% in 3 months.
yeah, yeah,
Okay,
it still did 30% because
it's pretty good.
sometimes it shorts and it makes money.
Huh.
Shorts here makes money, so like shorts here makes money. So,
When do you know when to
but
not use specific algos?
I mean, with some algos like that, you just let them trade. You have to believe in it enough just to let it
But this
trade.
one's been 3 months. When would you like?
This one I would put off. Like the logic with that those type of algorithms, that you usually put them off when they break one of the major parameters that it's been back tested on. For example, if it's a maximum drawdown historically was 8.4%, if it starts going -10, that means something is broken in this
Okay, it's time
algorithm.
to
So
get
it's
out of
not
there.
performing in accordance with expectation.
Turn it off and
Or
optimize it.
profitable trades. If they start falling to like 49 or 48%, that might be within the reasonable discrepancy. But if it
Okay.
goes way off and starts losing one after another, or if profit factor goes down, like for example here, we look at the list of trades and we see that it kind of does what we wanted to do. If like here it's not good, it lost pretty big, like, but we see on the graph it was a dumb trade that it took it all the way. So like, but generally small loss, small loss, small loss, big win, big win, big win, big win, big win, 10% win. So it gets like it wins bigger than it loses.
Okay.
Most 15% win, and like there is more wins. Like you see
Yeah,
that,
that's
like, but
good.
it's like it is definitely in that 50-50 range still that we're showing. So for now, there is no reason to turn that algorithm off because um, it's performing in accordance with the history, and we approved it because we like the history. We like 8.4 drawdown. We like that it trades quite a bit, but not over trades. We like that it makes that profit factor, and that's a 5-minute graph, so it satisfies our condition. This is a bit different strategy, but this problem of this strategy is that it's a 1 hour strategy, but
No.
pretty long 1 hour. So like it holds, for example, one great trade, one of the recent trade it made, it holded for uh, it holded for from July 22nd, from April 10th to July 22nd, so almost for 3 months it holded it. And if you deploying money into that strategy in May, you might have missed that great trade, which brought 50% return.
Got it.
So like this is like very, I like that trade. On the other hand, we did select it because look how many winning trades it has.
Yeah.
Loses very small,
Yeah.
but
Wow.
when it wins, it mostly
It
wins
wins big.
5, 7, 62, 49%. So like
Damn.
it catches the moves very well. Very simple, very basic strategy based of several parameters only.
Yeah.
But it catches the move like crazy, like from bottom to top basically, not
Yeah.
giving anything to the
Yeah.
market. Here from it shorted very nicely from top, or like not here, okay, it didn't cut all the way to the top, but it managed to make the money on the way up here, then got out
Got
of the
out here.
long trade here. Okay, you could argue that it's a bit too late,
Yeah.
but it still made money, and then it
Yeah.
made money all the way on the way down, and
Oh, it
all
did
that
make money on the way
money,
down. Huh.
yeah, big money on the way down. I'm not sure. So basically, what we see here, basically what we saw in the list of trades, that 80% of trades we win, and the profit factor is incredible. It's like 1 to 26. So on every dollar, on every $26 that we win, we only lose $1. And that
That's
strategy
great.
brought in 1 year, you would have made 115% by
Yeah.
trading that strategy with only 11 trades made.
Mm.
So it's, I mean,
How much did you have it on? I mean,
ex-
how long did you have it on for yourself?
I mean, we figured it out. We probably found that strategy around mid-year, I would say, like around December, January, like around that time. We started using the Algo around September, October, and probably around December, January, we found that strategy.
Okay. Okay. Good.
The last one that I want to share, because it's also a great strategy that we've been using for quite a bit and also showing pretty good results, is the Bitcoin 50-minute chart. From the beginning of this year, we're showing the results here. So from January 31st, from February, beginning of February, and we have 17.1% return. 44% profitable trades, but don't be tricked because the profit factor is great here. It's 3.3, and a drawdown is also very conservative for crypto, at least at 7.2%.
Okay.
So that's what I wanted to show in terms of some very simple strategy that we're using today.
So I wanna
Hopefully
know-
that was useful to everyone.
Yeah, I'm sure it was. I mean, it was useful to me. I'm super beginner with all this stuff. So how can retail traders and investors gain access to some of your research and and other institutional grade quant tools that you have?
So we're working on the platform right now. So for now, it's just the regular things, like regular simple things, like this YouTube channel where you guys going to be watching this video and short versions of it. Then, of course, on the X, we are very active on our Twitter account. We're posting daily alpha there, daily research, like daily highlights and daily advice there. We use both short tweets for fast and they like very like brief alpha, and then we do some detailed articles where we broaden the concepts a bit and explain what goes behind the analysis. We also have a private Telegram group for detailed analysis, for all the presentations, for signals and everything. So we're going to have all the links posted below in the notes below, in the comment section below. The Telegram is definitely a very good way to.
People can get access to the Telegram pretty simply.
Yeah. For now, we're just building the community. So for now, basically, all the research, all the information, all the research tier is for free. So basically, we're just showing everyone what we're doing, what we could do. You could try it for free for several months, get a feel of it, see if it's useful for you or not, see if it corresponds with your trading style, and then you could make decision to subscribe to our more advanced tools, which already come at a subscription basis. So,
okay, cool.
For now, the research level
is the subscription?
I mean, we're still working it out, but we think it will be like around $250 to $500, depending on the tier that you purchase per month.
Okay, that's pretty good.
And now we recently launched a Substack as well. So we're doing monthly, like the deeper looks, like the broader looks, the more top level looks. We started doing the bigger articles there. So like if you want to, like on a weekly basis, to see what I, for example, showed you today, that type of research with like more detailed analysis where you could look into what the different algos are doing and make your own decision and basically rely on the information provided by the algos to make for your final decisions. That's the Substack would be a good way to get the information. And we're working on the new website, which will be like very like Apple-like with various model portfolios, trades, signals, quant analysis dashboard, and educational content as well. It will be like that style of information. So it will be very like user friendly and very actionable, and basically you'll get all the data, and like you could value different scores. Everything is like highlighted, and then it'll be like overall table with final suggestions. So We'll probably have that lunch in like a couple of weeks as well
Okay.
to make
Awesome.
everyone's life much more easier. The
Yeah.
idea is basically to enhance people with the type of tools where you don't need to spend more than, let's say, half an hour a day, 45 minutes a day to basically review what's going on, to make sure that what you're doing is aligned with all the overall market trends, because you still need to do your own research, because
Yeah.
I mean you can't rely, like there's too much bullshit around us, and there is different angles of analysis as well. So if you want to trade, to make money trading and investment, there is two different approaches. But the quant approach is to understand what you're doing. We are pretty open, and we believe that that should be a big major trend going forward. Is the transparency, openness, just telling people that it works, and not explaining why it's working and how it's working. I believe is not enough, and for me, it's always a red flag. Like if I don't
Yeah.
understand
Exactly.
what's
Yeah, I
going
totally
under
agree,
the
man.
hood, and in order to understand what's going under the hood, you don't need to do some reading. You don't need to do
Some
some
research,
research.
yeah.
You need to do some calculations. You need to make sure that everything aligned and that you agree with what I'm telling you. I'm telling you the final advice. I'm telling you what to do. And I'm telling you, like, not even what to do, but I'm telling you what I am doing. But
That's right. That's
whether you
good.
agree with me or don't
Right.
agree with me, that's up to you to decide. And
Yeah.
in order to make that decision, you need data. We provide you with the data. We provide you with our analysis. We provide you with logic on how we did it and how we derived certain buy, sell signals, target profit, take profits, and stop losses. But we want you to question it. That's why we're creating that community. That's why we're creating that channel.
The
That's why we're
feedback is,
getting more active, because we want you to question us. We want you to, because in that process we might discover something new as well. Because it's
right.
like, it's the that those things moves in both directions,
Yes.
basically.
Agreed. 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 Wow. That's very. It's been very insightful. Even for me, to take a peek under the hood.
And taking into account that you're pretty advanced into that stuff.
I mean, I'm not really advanced into it. I mean, I'm learning a lot from you.
No, I mean, comparatively, compared to the
Yeah.
average retail trader, you are way more advanced than average
That's.
retail
I mean,
trader.
I've had a little bit of experience.
And
Losses
I
teach you a lot.
mean,
A lot of
that's
gains too, though.
that's what we're here to basically help people to avoid. Like, you don't need to lose to make. Like,
I
you can
know.
start
Yeah.
with making, but like the red flag for me is always when they promise too much. Like,
Yeah. Seriously.
I'm not like promising that those models would make you double X, triple X, quadruple X, because
Not even into that.
that
Honestly,
we
that's my
don't, like, yeah,
experience.
there is a bunch of
All that
there's
shit, and it's
hundreds of
like
people who would
it's
promise
better to
you
just
that type of
it's better
return.
to just earn your little 1 to 3% a month, 5% a month for a long time.
I believe, yeah, I believe anything that earns you anything that earns you between 3 and 5% a month, which equates to 50 to 60 a year.
Yeah.
That's the maximum that you could dream of. You should not ask for more.
Exactly. I hear a lot of guys.
And anyone who promises more than that,
It's like,
usually not going to perform up to what they
yeah,
just promised.
exactly. That's been my experience. So I think that's really awesome. And yeah. So with
It
that
was
being
good
said,
talking to you, Ziggy. Thank you very much. It was very good questions that you asked. Very productive conversation. A great start, I believe, we put together. Let's keep it going. Let's keep the alpha rolling. I'll
let's
do
do it.
some analysis over the weekend and get
Yeah,
ready
yeah.
for the next week
Let's get ready for the next
show.
one. Get ready
We
for the
should
next
probably
week.
do live on the Fed's announcement. It will be
Do
fun.
live.
Yeah, the
We
live for
could.
the Fed announcement.
Okay, yeah.
It's a lot of fun. It'll be like
Yeah, let's
rockets,
see what's happening. As long as we're making money, I'm down to spend time, And that's what we do on the Ark Quant Crypto Podcast.
Thank you and good night.